A very good afternoon to all my dear students. Today we are here to start chapter number 3, which is risk assessment and internal control. Though in our last session, we have already discussed about few different types of risk that we are going to learn in this chapter. So I've given you an idea as to what various kind of risk like audit risk, risk of material misstatement, inherent risk, control risk, detection risk was left, but we haven't touched the module. So today we'll be starting afresh from the module also. So let me just share my screen. So chapter number 3, which is risk assessment and internal control. So students, in the last session, I have told you about audit risk, then misstatement, risk of material misstatement, inherent risk, and control risk. Till here, right? Though I'll be touching upon these topics again for all those who haven't attended the last session. So what is audit risk? So it is basically the risk that the auditor gives an inappropriate opinion when the financial statements are materially misstated. That the auditor gives an unmodified opinion, though the financial statements are materially misstated, right? So this is the risk that auditor gives an inappropriate opinion. When we were discussing this definition in the last session, I told you that two things are not covered in the definition of audit risk, which is very, very important. Let us just have a look at it from the module. So audit risk is the risk that the auditor gives an inappropriate opinion when the financial statements are materially misstated. That is, the auditor expresses an unmodified opinion when the financial statements are materially misstated. So there is some material misstatement. Though the auditor has given a clean report, an unmodified report to the client organization. See, students, if this happens, that auditor gives an inappropriate opinion, what will happen? There will be an impact on the reputation of the auditor, right? And there can be what? Some legal consequences that can be taken against the audit firm, right? But that legal action that can be taken or the reputation which has been hampered or damaged, that is a part of business risk of the audit firm. So that will not be covered as audit risk. So where is it given? If you remember, gave you this as a homework also. So this is on page number, just 3.8 of your module. Very, very important. So audit risk is a technical term related to process of auditing. It does not refer to the auditor's business risk. See, auditor is also carrying on a business of delivering auditing services now. So certain risks are associated with such kind of business also. So this adverse publicity or maybe loss from litigation or any such event, this is what a kind of business risk for the auditor's business, right? For the audit firm's business. So that is not termed as audit risk, right? So audit risk is a technical term related to process of auditing. It does not refer to auditor's business risk such as loss from litigation, adverse publicity, or other events arising in connection with the audit of financial statement. So this is one first point which is not covered into within the definition of term audit risk. Is it clear? Is it clear? Right? Now, second thing which is not covered in the definition of audit risk is what? What is audit risk? That auditor gives an inappropriate opinion when the financial statements are materially misstated. That is, what is audit risk? That the auditor says that auditor gives a clean report or an unmodified report, though material misstatement was there in the financial statement, right? The opposite of this, that is, auditor gives a modified opinion though there was no material misstatement. That is, the auditor says that, see, for the purposes of the essay, audit risk does not include the risk that the auditor might express an opinion that the financial statements are materially misstated when they are not. When they are not. Why? Because chances of this happening is really very insignificant. So this is also not covered in the definition of term audit risk. So the term audit risk is important as to what is covered, and what is not included is also important. So I hope it is clear. Swati, Om, Bhumika, others also please reply. Is it clear? Swati, yes, I'm able to see your messages on this platform where you are sending your messages. So I hope it is clear. So what is included and what is not included. So yes, because of audit risk, there will be adverse publicity. There will be a damage to the reputation of the CA firm or the auditor, but that is the business risk, right? So see, in order to avoid any such condition, what will auditor do? He will perform the audit procedures. He'll obtain audit evidence so as to reduce the audit risk to an acceptably low level. You all have done chapter 1 with me, and we have seen there that audit risk cannot be reduced to zero. It can be reduced to an acceptably low level. Quickly tell me what are the reasons why audit risk cannot be reduced to zero? Quickly send in your replies. So because of the inherent limitations of audit. Audit risk is a function of risk of material misstatement and detection risk. So let us first read what is risk of material misstatement. So prior to audit, the financial statement are prone to a risk of material misstatement, whether due to fraud or error. That is called as what? Risk of material misstatement. That audit as such has not come into picture. The financial statement, see, it states that risk of material misstatement is the risk that financial statements are materially misstated prior to audit. Very, very important, prior to audit. It simply means that there is a probability of frauds or errors in the financial statement before audit. Fraud or error, because material misstatement, you all know, it can be due to fraud or it can be due to error. It is just a repetition of what we have done in the last session, though we have not covered it from the module. So I'm taking a bit from the module. Now, what is the misstatement? So it is basically the difference between the amount, classification, presentation, and or disclosure of a reported financial statement item. So any item, whether with respect to that particular item, the amount or the classification or the presentation or the disclosure. So the reported item, financial statement, and the the amount, classification, presentation, disclosure that is required for that item in accordance with the applicable FRF. For example, the applicable FRF, suppose any expenditure of, let's say, 1 lakh has been incurred. The applicable FRF requires this to be capitalized as the cost of the asset. However, the same has been charged to P&L. So this is what a misstatement, right? Is it clear? Or let's say, according to the applicable FRA, 50,000 is to be considered as the expense. However, the reported amount is, let's say, 1,50,000. So this is what a misstatement. It can be due to fraud. It can be due to error. So various examples are given on page number 3.5. I think I have given you as homework this table also. So charging of an item of capital expenditure to revenue or vice versa. Difference in disclosure of a financial statement vis-a-vis the requirement in applicable FRF. Selection or application of inappropriate accounting policy. See, these are what? Misstatement. These can be either due to, these can be intentional or unintentional. So if these are intentional, they become what? Fraud. And if they are unintentional, they are what? Error. Difference in accounting estimate as per FRF and whatever has been shown. Intentional booking of fake expenses. This is a fraud itself. Overstating of receivables in financial statement by not writing of the irrecoverable debts. Overstating or understating inventories. I hope these examples are clear. So material misstatement, students, this risk of material misstatement, so you have understood that this is basically a risk which is there in the financial statements, right? Prior to audit. Now, it may exist at two levels, that is financial statement level and your assertion level. Now, for understanding this, now let me just quickly tell you as to what is meant by assertion, though it is there in your next chapters in detail. So, assertion. So, see, whenever, let's say, in the balance sheet, building of 10 CR has been shown. Now, who has given this information? It is the management. So, management gives all the assertion to the auditor, and the auditor uses such assertion to see whether there are potential misstatements in the financial statement. See, management is going to give certain information. That information only the auditor is going to check, and then he is going to say whether the financial statement reflected true and fair view. So, whatever information is represented by the management, that is what assertion. So, let us try to understand the term assertion with the help of this example. So the building, the historical cost of which is shown as 10 CR. Now here, when the management has represented in the financial statement in the balance sheet that the building is 10 CR, management wants to say that this building actually exists. So are these words written somewhere in the balance sheet? No, but these are what implied assertion, that if the company's balance sheet is having a building of 10 CR, it actually exists. This is one assertion by the management. It is implied assertion, right? Another assertion is what? The historical cost of which is 10 CR, right? Another thing that management wants to say is that the valuation of this building is correct, right? Another assertion that the management wants to say is that the presentation and disclosure of this building is correct. Though these as such are not mentioned, and these are what implied assertion. Now, I told you that auditor is going to use these assertions only when he's checking the financial statement, and more specifically in our example, the building. So auditor is going to perform various audit procedures. So if he wants to check whether this existence assertion is correct or not, what he can do is he can have an inspection of the building. He can look by his own eyes now as to whether that building actually exists. When the, let's say another assertion is that the building is owned by the company. So when the auditor wants to see whether this assertion is correct or not, ownership. So see, by just looking at the building, this assertion cannot be confirmed. But yes, by inspection of what? Title deed, this assertion can be confirmed. So auditor is going to perform what? Again, inspection, right? So with respect to valuation, whether the valuation is correct or not, auditor may ask the management to provide with what? Depreciation schedule, and auditor may recalculate such depreciation and the amount of the building. Now tell me, what are these? These are what? Audit procedures which the auditor is performing in order to see whether the assertions given by the management in our example with respect to building, whether these are correct or not, right? So assertion is the particular information about the particular item of the financial statement, though we will be covering this in detail in our chapter number 5. So I hope for the purpose of this, you are able to understand as to what is meant by assertion. So we were discussing a topic that risk of material misstatement, it may exist at two levels, financial statement level and assertion level. So where any risk is there, which has an impact on the financial statement as a whole, which has an impact on many assertions of the financial statement. So that is what? That is having a pervasive effect. Pervasive is present everywhere, right? Omnipresent. So that is what? Overall financial statement, right? And the risk that is having an impact with respect to a particular assertion level for a particular class of transaction, account, balance, or disclosure. So let's say it is that error or that misstatement is having an impact with respect to the building amount only. with respect to the depreciation amount only and not to the entire financial statement or the entire balance sheet and P&L. So this is what risk of material misstatement at the assertion level. Is it clear? So the risk of material misstatement may exist at two levels, that is the overall financial statement level and the assertion level. And assertion level is with respect to either the classes of transaction or the account balances and the disclosure, right? So when we are saying the account balances, that means the balance sheet item. When we are saying the classes of transaction, that is basically the results which are shown in the P&L account and the disclosures that are required to be made with respect to the financial statements of a company, right? So the risk of material misstatement at the overall financial statement refer to the risk of material misstatement that relate pervasively, that is present everywhere, to the financial statement as a whole and potentially affect many assertions, right? And risk of material misstatement at the assertion level. These are assessed in order to determine the nature, timing, extent of further audit procedure necessary to obtain the sufficient appropriate audit evidence. See, further audit procedure I'll discuss when we will be doing a further topic. So wahan pe I'll take this topic again. But I hope the concept of financial statement, overall financial statement and the assertion level is clear to all of you. Quickly send in your replies, then only I'll proceed further. So quickly send in your replies. We have done till here. So Om, Sukaina, Swati, they are saying, ma'am, it is clear. Now, we have seen that audit risk is a function of risk of material misstatement and detection risk. We have done audit risk and risk of material misstatement. Now, the two components of risk of material misstatement is inherent risk and control risk. And as we have discussed in the last class also that, see, I told you that risk of material misstatement exists prior to audit, before audit, right? So the auditor cannot influence risk of material misstatement. So who can influence? See, the financial statements are prepared by management. So these two risks, that is the inherent risk and the control risk, which together form risk of material misstatement, these relate to the entity. These are entities risk. So both inherent risk and control risk are the entities risk and they exist independently of the audit of financial statement. Inherent risk and control risk are influenced by the client. These are entities risk and are not influenced by the auditor. Very, very important. Is it clear? Bhumika, Swati, Sukaina, Om, Anmol. Right? Now, what is inherent? So the way we did inherent limitations of audit, so you must be remembering the meaning of the term inherent. So inherent is inbuilt. So this risk is inbuilt within the process of preparation of financial statements. So even before considering controls, so there when we were discussing risk of material misstatement, I said that before audit, prior to audit. So here I'll be saying that it is the susceptibility of an assertion. Susceptibility is what? Likeliness or likelihood of an assertion. Now you know what is meant by assertion. And assertion is always about a class of transaction, account balance, or a disclosure to a misstatement that could be material either individually or when aggregated with other misstatements before consideration of any related control as described in SA 200. SA 200 gives the definition of all these risks, right? So that is why it is mentioned as described by SA 200. So it basically says that before consideration of related control, there is a risk. There is a likeliness of a assertion to a misstatement, which could be material, either individually or when considered aggregated with other misstatements. So what is that called? Inherent risk. So students, we are on page number 3.6. Now see if there is any complex transaction. Let's say any mergers and acquisitions have been done during the year. So chances are there that risk that a risk of material misstatement, whether due to fraud or error with respect to such transactions are more. So inherent risk will be there with respect to each and every transaction or account balance or disclosure. But there will be what? There will be a difference of the degree. That is whether the inherent risk associated with a particular class of transaction or account balance or disclosure is high or low, right? So that is why the auditor needs to identify and assess the risk of material misstatement. So when he's identifying and assessing the risk of material misstatement, he's identifying this inherent risk also, right? Because accordingly, he will plan his further audit procedures. So I hope you are getting the flow as to how these topics are related, right? So we have seen that these are basically over a range of degree of inherent risk. An auditor will assess whether the degree of inherent risk is high or low with respect to a particular transaction or an account balance or disclosure. How will auditor assess? By applying his professional judgment, right? By performing various procedures. For example, let's say there is a company, mobile company. In the last session also, I think I gave you this example. So in the mobile company, the technological developments are very much required, right? So if a company is not able to develop the technology, its product may become what? Obsolete. And altogether, there can be an impact on the going concern. Thereby, there is a risk that the financial statement may not reflect a true and fair view, right? Whether intentionally or unintentionally. So depending upon the nature of the circumstances that are existing, or depending upon the last example that we discussed was relating to what? Complex transaction, the nature of the transaction, the auditor will determine whether the inherent risk is high or low with respect to a particular transaction, right? So various examples of inherent risk can be what? Suppose any standard, accounting standard, it has given a guidance with respect to any complex issue, but the management is unaware or it is not able to implement that in the manner it is required. So it is what? Inherent risk of being misstated. Or there are large number of business failures in an industry. Therefore, assertions in financial statement of an entity operating in such industry may carry inherent risk of being misstated, right? So students, I'm just taking you through the module. We have already covered from my summary in the last session, all these topics. Now, what is control risk? Please send in your replies whether it is clear. We are now on page number 3.7. But before that, is it clear? Om, Anmol, Bhumika, Swati, Sukaina. Others also please reply. So control risk. So when we were considering the risk of material misstatement, we said prior to audit. When we were considering inherent risk, we said before any related controls, right? The risk associated with such control before any related controls now. So the risk associated with such internal controls is what? Control risk. So just try to understand now that the internal control is not able to prevent or detect and control a misstatement on a timely basis. This is what control risk. So let us just have a look at the definition given by SA 200. So control risk is the risk that a misstatement that could occur in an assertion, again the same language, about a class of transaction, account balance, disclosure, and that could be material either individually or when aggregated with other misstatement. See, exactly the same language. So be a smart learner, Hana. Just mark that these languages are same. Will not be prevented or detected and corrected on a timely basis by the entity's internal control. So again, see the financial state, when we were talking about inherent risk, so that was inherent in the preparation of financial statements itself. So that is the risk related to the entity itself. Again, control risk. The misstatement will not be prevented or detected and corrected on timely basis by the entity's internal control. You all are very well aware that internal control ka design, implementation, maintenance, whose responsibility is this? It is of the management. Auditor assesses the internal control whether it is good or not. Why? Because he want to determine his level of checking his substantive procedures and not for the purpose of giving any opinion as such when he's conducting the statutory audit of a company, which we are talking about. Okay. So I hope this is also clear. Control risk. right? Now, students, tell me one thing. When I say that the control risk, when I say that the internal control is efficient, tell me what will be control risk? Will it be high or low? When the internal controls are very good, they are very efficient, they are working, operating effectively. Quickly tell me, when the internal controls are operating effectively, control risk will be high or low? Quickly send in your replies. Quickly send in your replies. I've said that when the internal controls are operating effectively. So the control risk, what is the control risk? That internal control is not able to prevent or detect or and correct material misstatement on a timely basis. Yes, absolutely correct. Anmol, Om, Mohammed Shoaib, Sukaina, Swati, Bhumika, absolutely correct. So this tells me that you are able to understand what we are discussing. So see, there is an inverse relationship between the effectiveness of internal control and the control risk. So if the internal controls are effective, then the control risk is going to be less. If the internal controls are not effective, then the control risk is going to be more. And yes, Swati, you are absolutely correct that auditor will identify and assess all this risk of material misstatement, which includes what's inherent risk and control risk. And under which essay auditor identifies and assess the risk of material misstatement through understanding the entity and its environment. Quickly tell me the essay number. I've told you the entire name of the essay. Swati, you tell me under which essay, what is the number where the auditor identifies and assess the risk of material misstatement through understanding the entity and its environment? Anmol, you are absolutely correct. Others also, please reply. So the essay number is essay 315, which we will be doing today, right? So let me just take you through the module. So this is important again. Therefore, in a way, it can be said that there exists an inverse relation between the control risk and efficiency of internal control of an entity. When efficiency of internal control of an entity is high, the control risk is low. And when the efficiency of internal control of that entity is low, the control risk is high, right? Now, examples of control risks are given. Very simple examples. It basically says that, let's say a control is been implemented by the management, or a very simple example. Let's say there is an internal control that the accounts department, they'll prepare the monthly bank reconciliation statement. This is what internal control implemented by the management. Now, this is not happening. This control, it happened only in the month of, let's say, April and May. Thereafter, for the next 10 months, there was no BRS that was prepared. So this is what the control risk, right? Or the example that is given here is that, let's say there is a control implemented by the management that the cash and the checkbook will be kept in the safe, but that is not happening. Or let's say there are fire extinguishers and smoke detectors. They have been implemented, but they are not working properly. The fire extinguishers, they are not refilled. Let's say every year they need to be refilled, but the same is not happening. The smoke detectors are not working, right? Or let's say, let us just read this point. A company has devised a control relating to petty cash that the items of expenditure of only less than 10,000 should be routed through impress system of petty cash, but that is not happening. So this is what I gave example of what bank reconciliation statement. Then segregation of duty. Again, another important internal control. Hana? So let's say there is an internal control that with respect to any processing of payment, so the person who will be entering in the system, the person who will be making the payment, and then the person who will be receiving the confirmation, they should be different, right? Segregation of duty, but that is not happening, right? So this is what, these are what control risk. Is it clear? Is it clear? So we have studied till here in our last session. Now we'll be starting with what? Your detection risk. So again, I'll repeat it here. Audit risk being a function of risk of material misstatement and your detection risk. Risk of material misstatement is entity's risk. inherent risk and control risk. So what is detection risk? See, now the auditor comes into picture, that the audit procedures that the auditor is performing, by performing such procedures, he is not able to detect a material misstatement that exists in the financial statement. Detection risk, as the name suggests. So what is the definition that has been given by SA 200? It says that the risk that procedures performed by the auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists and that could be material. Again, the same language, either individually or when aggregated with other misstatement, right? So this is what detection risk. Now, students, just try to understand that we have seen that audit risk is a function of risk of material misstatement and detection risk, right? So what is the detection risk? That any procedure that the auditor perform, by performing that procedure, he is not able to detect a misstatement that exists and that could be material, either individually or when aggregated with other misstatement. Now, why this line, to reduce audit risk to an acceptably low level? See, you all know that this audit risk cannot be reduced to zero. Audit risk cannot be reduced to zero, but yes, it can be reduced to an acceptably low level, right? Now, when audit risk is a function of risk of material misstatement and detection risk, an auditor cannot do anything with this risk of material misstatement because this is what? This is entity's risk. So what is in the hands of auditor? Only to reduce detection risk. Then only in this mathematical equation, this AR can be reduced, audit risk can be reduced. So that is why to reduce audit risk to an acceptably low level. Are you able to understand? See, auditor cannot influence risk of material misstatement. So what is in the hands of auditor in order to reduce audit risk to an acceptable low level? He can work on the detection risk only, right? And how can he work? We have seen in the last session, I think also, that see, how can detection risk be reduced? So here, what can auditor do? He can increase the sample size that he's taking. Okay, let's do one thing. Before understanding this sample size wala thing, let us see what are the two parts of detection risk. So the two types of detection risk are what? Sampling risk and non-sampling risk. So sampling risk, you all know that it is not practically possible for an auditor to check 100% transaction. So often the sampling techniques are used, right? So what is sampling risk? That the auditor's conclusion based on the sample may be different from the conclusions if the entire population were subjected to some same audit procedure. So let's say the auditor has taken 10% of the sales transaction as sample and he has applied certain procedures on this and he found that, okay, there are two misstatements. Vis-a-vis, if he would have applied all those audit procedure to the entire population, then the results would have been different. So this is what sampling risk. Again, this sampling risk is inherent to the process of sampling itself, right? So what is the risk? It is the risk that auditor's conclusion based on the sample may be different from the conclusion if the entire population were subjected to audit procedures. Because you all know that auditor do resort to sampling techniques, right? Now, what is non-sampling risk? So let's say the auditor has to check the inventory, and for that he needs to attend the physical inventory count which has been done by the management, right? But auditor, he skips such audit procedure. He does not attend the physical inventory count and performs certain alternative procedure, and thereby he is not able to detect any material misstatement. So what is happening here? Is it a risk due to sampling? No. It is for a reason other than sampling. So here he is arriving at an erroneous, at a wrong conclusion because of wrong selection of audit procedure. So what is non-sampling risk? Auditor reaches an erroneous conclusion for any reason not related to sampling risk. For example, due to inappropriate audit procedure. Is it clear? Is it clear? So what is the example of sampling risk? For example, if the sample chosen is not a representative of the entire population. So this is what an inherent risk within the sampling process. So these are the two types of your detection risk. So let us have a look at it from the module. So detection risk comprises of sampling risk and non-sampling risk. Sampling risk is a risk that the auditor's conclusion based on a sample may be different from the conclusion if the entire population were subjected to the same audit procedure. It simply means that the sample was not representative of the entire population. Non-sampling risk is the risk that auditor reaches an erroneous conclusion for any reason not related to sampling risk, like an auditor may reach an erroneous conclusion due to an application of inappropriate audit procedures. So what can be detection risk? Example this, sizable work in progress inventories are expected in financial statement. However, auditor does not devote time to attending physical inventory count. Instead, he chooses to rely on some alternate audit procedure. So this is what non-sampling risk. Or let's say the auditor of a company has audited revenue of a company by taking a sample, and there is a risk that sample is not representative of the overall population. So sampling risk example is this, and non-sampling risk example is this, right? Now, very, very important. The auditor can only influence detection risk. Inherent risk and control risk belong to the entity and are influenced by the entity. Therefore, auditor must reduce detection risk in order to keep audit risk at low level. Detection risk may be reduced. How can the detection risk be reduced? Detection risk be reduced by increasing the areas of checking, taking larger samples, or by including competent experienced persons in the engagement team. Very simple. So if the auditor sees that there is a detection risk, so obviously the extent of working is going to increase. How? By increasing the area of checking. Let's say the auditor has decided that with respect to the sales transactions, let's say only these transactions will be checked. So now the extent area of checking will be increased. Taking larger samples. So when out of 100, let's say auditor decided to check only 20 transactions, now he's taking 40 transactions, or let's say 50 transactions, or including competent and experienced persons in the engagement team. So I hope it is clear. And I told you that how will auditor assess? By applying his professional judgment. So assessment of risk is a matter of professional judgment, right? So what all is included in the definition of audit risk? A risk that auditor gives an inappropriate opinion when the financial statements are materially misstated. It is a function of risk of material misstatement and detection risk. What are not included? So auditors business risk such as, see why? Because that becomes auditors business risk, such as loss from litigation, adverse publicity, or other events arising in connection with the audit of financial statement, or a risk that auditor might express an opinion that financial statements are materially misstated when they are not. Why? Because this kind of risk is really very insignificant. So this is the summary. Audit risk is a function of risk of material misstatement, detection risk, and risk of material misstatement is function of your inherent risk and control risk, and detection risk is what? Sampling risk and non-sampling risk. So auditor will make a combined assessment or individual assessment of risk of material misstatement. So in any ways, auditor has to determine the risk of material misstatement, and how he does that we will do when we will be doing essay 315, which is our next topic. But before doing that topic, let us just go through this illustration, which is given on page number 3.10, illustration 1. Meanwhile, please send in a reply. Are you able to understand and learn also whatever we have done so far? This chapter is really very, very important. And these definitions of risk, these concepts are the basis of this entire chapter. Please send in a reply and read this illustration 1. So XYZ Limited is engaged in the business and running several stores dealing in variety of items such as ready-made garments for all seasons, shoes, gift items, watches. There are security tags on each and every item. Moreover, inventory records are physically verified on monthly basis. Discuss the types of inherent risk, control risk, and detection risk as perceived by the auditor. Quickly tell me, Swati, I'll take up your doubt. Quickly tell me, what is the control? There are two types of control which are there with respect to such inventory. Tell me, what are the two internal controls that have been implemented by the management? Read this question again and quickly send in your replies. Quickly send in your replies. So, meanwhile, I'll just take up Swati's doubt. So, Swati is saying that, ma'am, please give an example of non-sampling risk. So, let's say here the auditor has to check whether the auditor has to consider the status of the litigation that is going on in the company. Some litigation is there against the company. Now, instead of asking the external legal counsel, so the appropriate audit procedure was to consult the external legal counsel, or let's say the internal legal counsel of the department, right? Instead of that, auditor just asked the accounts department about that litigation. So this is what inappropriate audit procedure. Though in both cases he's inquiring, but the wrong official. So is it due to what sample? No, it is not due to any sampling technique. It is again a non-sampling risk, right? So let's say the auditor wanted to know about the existence of the building, right? So he should have what inspected the building. But instead of that, he just went through the papers that were there. So going through the papers will not help auditor to determine whether that building actually exists, right? So this is again what? A non-sampling risk. Or take it vice versa. Auditor had to know about the title of the building. So for that, the auditor needs to go through the title deed of the building. But instead of performing this inspection procedure of the physical document, he just inquired the management. So this is what selection of wrong audit procedure. So Swati, is it correct? Is it clear now? And yes, with respect to this question, I asked you to tell me the two kinds of controls. So these are what? The tags that are there on each and every item, and also that they are verified on a monthly basis. So what can be control risk? So control risk will be related to these controls only, right? So let us just have a look at inherent risk. So because items may have been misappropriated by employees, therefore risk to the auditor is that inventory records would be inaccurate. So chances are there na, that the inventory has been misappropriated by the employees. So whatever information is appearing, that is what inaccurate. This is what inherent risk. Control risk. There is a security tag on each item displayed. Moreover, inventory records are physically verified on monthly basis. Despite various controls being implemented at the store, still collusion among employees may be there, and risk to the auditor would again be that inventory records would be inaccurate. So collusion can be there. So again, inaccurate inventory records. And what will be the detection risk? So this is what auditor checks the efficiency and effectiveness of various control system in place. He would do that by making observation, inspection, inquiry. In addition to these, the auditor would also employ sampling techniques to check few sales transactions from beginning to end. However, despite all these procedures, the auditor may not detect the items which have been stolen or misappropriated. So three kinds of risk from this example: inherent risk, control risk, and detection risk. I hope it is clear. Right? Read the second illustration. A partnership firm of chartered accountant Ch3 and Associates were appointed to audit the books of accounts of Wind and Ice Limited for the financial year 2021. There was a risk that Ch3 and Associates would give an inappropriate audit opinion. Do not look at the answer. If the financial statements of Wind and Ice Limited are materially misstated, state the risk mentioned in the question. Quickly send in your replies. See, this is a practical situation given to you, but based on your conceptual knowledge only. Right? So for all those students who say that, ma'am, how to answer to the practical situation questions? So every such question will be based on conceptual knowledge only. So if your concepts are clear, I'm sure you'll be able to write the correct answers. So it is audit risk, and Komalpreet and Bhumika, you are absolutely correct. So Anmol has asked me to repeat this illustration 1, whereby he wants me to discuss the inherent risk and detection risk. See, this is a situation which has been given to you. Now, what can be the inherent risk? So this is talking about what? The inventory. So what can be the inherent risk associated with the inventory? So it basically says that there is always a risk that the employees may misappropriate the inventory. Why? Because it is inbuilt, right? It is in the very nature of inventory that it can be. See, shoes, gift items, watches, the very nature of the inventory is like that only, that the employees can always misappropriate it. They can always, steal it and use it for their own use. So if any such thing happens, then the records that are being shown, they would be inaccurate now. Inherent within the nature of the inventory. See, shoes, gift item, watches, easily these can be stolen away. So because items may have been misappropriated by employees, therefore risk to the auditor is that inventory records would be inaccurate. Is it clear? Then he's asked me to repeat detection risk. So control risk, so it is clear that two kinds of control are there. They will not work. So that becomes what? Control risk. Now detection risk. See, auditor applies the procedures in order to, see whether the inventory reflects a true and fair view. He might also resort to sampling techniques, right? However, despite of performing all these procedures, the auditor may not detect the items which have been stolen or misappropriated. Why? Because first of all, inherent risk is there because of the very nature of the inventory. And second, see, though controls are there, but collusion among employees can be there. And you all know that audit is an audit function. It is not an investigation. So if any collusion has been done by the employees, so it might be possible that the auditor may not be able to detect the items which have been stolen or misappropriated. Is it clear? So let's say there is segregation of duty, right? The person who will be counting the inventory, the person who will be making the records, and then the person who will be issuing the inventory. So all are different. But let's say there is a collusion among these three. So will it be possible for the auditor to detect what misstatement has or whether the records are inaccurate? No, right? So I hope, Anmol, it is clear. Yes, Mohammed, you are correct. Anmol says, yes, ma'am, it's clear. Quickly go through this test your understanding. One. So wear and tear, do not look at the answers at the back and just apply the concepts that we have understood. So quickly we will do these test your understanding. There are, I think, 3. Then we'll start the next topic. So Wear and Tear Private Limited is a startup engaged in providing holistic solutions to problem of paddy stubble burning, mainly catering to needs of the farmers of northern and western India. Due to importance given by the governments to the issue, companies have entered in the market in past few years. Many of these companies have not been successful and have gone bust. As an auditor of the company, can you spot the component of risk of material misstatement? So you all know risk of material misstatement has 2 components, inherent risk and control risk. So answer will be out of this only. Quickly send in your replies. Quickly send in your replies. So what kind of risk has been talked about? Quickly, I'm waiting for your replies. So many of these companies have not been successful. So Komalpreet, Swati, Mohammed, Sukaina, Om, absolutely correct. It is what? Inherent risk. So here though we are not talking about controls, Abhina. So since many of the companies have not been successful, so chances are there that the management may show inaccurate or fake details in order to show, let's say, the profits. So auditor, so this is what? Inherent risk, because this is a very unstable sector. So this risk is inherent to the nature of this industry. Let's go through this test your understanding second. A company has devised a control that its inventory of perishable goods is stored in appropriate conditions. A company has devised a control in a controlled environment to prevent any damages to inventory. Responsibility is fixed on two persons to monitor environment using sensors and to report on deviations. Identify the component of risk of material misstatement involved as an auditor. Again, there are two components, inherent risk and your control risk. So what is the answer? Quickly send in your replies. Om, you are correct. Others also please reply. So here, see, I have circled all the types of control, right? So this is basically talking about the control risk. Anmol, Aditya, Mohammed, Shoaib, Bhumika, Swati, absolutely correct. It is what? Control risk. Go through this third test your understanding also on page number 3.12. So Ch3 Foods Private Limited is engaged in manufacturing of garlic bread. The auditors of company have planned audit procedures in respect of recognition of revenues of the company. Despite that, there is a possibility that misstatements in revenue recognition are not identified by the planned audit procedures. So which risk is been alluded to? Which risk is been referred to? Quickly send in your replies. So absolutely correct. This is what? Detection risk. Right? So Swati was asking me that, ma'am, whether the auditor has to assess the inherent risk. Yes, auditor will identify and assess the risk of material misstatement. How? Through understanding the entity and its environment. And where is it given? This requirement given, this is given by SA 315. So now we'll be starting with SA 315. Very, very important. And in fact, the name of this essay, this is basically the summary of what you are going to read in this essay. So just read the name again. So identifying. So auditor will not just identify. Identifying is what? Okay, let us just try to understand the meaning. Identifying is what? Discovering. Assessing is what? Evaluating. Now you all know what is risk of material misstatement. So auditor is going to identify and assess the risk of material misstatement. How? Through understanding the entity and its environment. And you will see that when we will do the explanation of this SA 315, so it says the name is still here, its environment. The environment includes what? Internal control also. Okay. So where is it given? In SA 315. So if you remember, when we did SA 300, quickly tell me what was SA 300 about? Quickly send in your replies, the name of the essay or anything related to SA 315. This will tell you as to whether you remember your previous two chapters or not. Quickly send in your replies. Quickly, students. Mohammed Shoaib is correct. Others also please reply. So students, you all should remember whatever we have done. I always tell you that before coming for the session, you should go through whatever we have done so far. It is going to take just 20-25 minutes. At least as of now, it is not going to take more than that if you have done the earlier chapters, because only two chapters are there and they are not very lengthy topics. So yes, Mohammed Shoaib, Sukaina, Komal Preet, Swati, Om, Gupta, Bhumika, Anmol, absolutely correct. Planning and audit of financial statement. So if you remember, we saw that the plan should include a description of, if you remember, the nature, timing, extent of planned risk assessment procedures. That was the first point. So that point was discussing about these procedure which the auditor is going to perform. So when the auditor is identifying and assessing the risk of material misstatements, see, I told you earlier also that the audit procedures will remain the same. What are the audit procedures? Like inspection, your recalculation, or if we talk about BRS, so reperformance, or let's say inquiry. We are going to do all these in detail in the next chapter. So more or less, the procedures are going to remain the same, but the context in which they are being performed. So you will see that there are risk assessment procedures, three kinds of risk assessment procedures that the auditor performs. So when the auditor is performing the risk assessment procedure, what is he doing? He is identifying and assessing the risk of material misstatement, right? And in order to understand the entity and its environment, so if I ask you that how the auditor is going to understand the entity and its environment, you will say that, ma'am, by performing the risk assessment procedures. What are the various kinds of risk assessment procedures that we will be doing? Aditi, your doubt is not clear. Please reframe it and send it again. See, right? So we were doing what? We were doing essay 315. So see, students, if you remember, I'll just write here quickly. When we were doing essay 300, there were 3 points. It said that the audit plan will include a description of nature, timing, extent of planned risk assessment procedures. So this was basically our essay 315. Now, when the auditor has identified and assessed the risk of material misstatement, that there is a risk. So what will auditor do? Will he ignore such risk? No, he will respond to that risk. And where he responds in essay 330, the nature, timing, extent of planned further audit procedures. If you remember, we have done that. And then the third point was other audit procedures. Remember? So abhi we are discussing about essay 315. And where is this requirement coming from? Essay 300 only, if you remember, that the plan is going to include the nature, timing, extent of planned risk assessment procedure, right? And how the auditor is going to perform to respond to such identified and assessed risk by performing certain audit procedure. So the name of essay 330 is the auditor's responses to assessed risk. And where he has assessed the risk under essay 315. Try to link all the essays. I'm sure you'll be able to answer it. You'll be able to understand all the linkages. Okay. Now, this assessment, identification and assessment of risk and material misstatement, this will provide a basis to the auditor for designing and implementing the responses to assess the risk of material misstatement. And I told you where auditor gives the responses. See, how will auditor give response? He'll not talk with the risk. He'll again perform certain audit procedures. So this is under essay 330. So essay 315 में he identifies and assesses the risk of material misstatement. How? Through understanding the entity and its environment. How? By performing risk assessment procedures. Essay 330 में auditor responds to such risk. How? By performing the further audit procedures. And more or less, I told you the procedures are going to remain the same, but the context in which you are going to use. If you are going to use it to identify and assess the risk of material misstatement, they'll become risk assessment procedure. If you are going to perform such audit procedures as a response to the assessed risk of material misstatement, they will be what? Further audit procedure or substantive procedure which we'll be doing in the next chapter. So what is the objective of the auditor in terms of essay 315? So I told you this name is really very, very important. So whatever is mentioned here, this is the objective of the auditor also. So it is to identify and assess the risk of material misstatement. And you all know that misstatement can be whether due to fraud and error. And you all now know that risk of material misstatement can be at financial statement and the assertion level. How? Through understanding the entity, its environment, and including the entity's internal control. Why? Because you all know that 330 में response करना है. For providing a basis for designing and implementing the responses to assess the risk of material misstatement. How? By designing and performing the further audit procedure. And कहाँ पर perform करते हैं, कहाँ पर respond करते हैं, SA 330. I hope it is clear. It is clear, and I hope that you should find all this interesting also. So when the auditor is identifying and assessing the risk of material misstatement, what actually is he performing? So first of all, he shall identify the risk. He shall discover the risk. How? He may discuss with the management that, let's say it is the company is engaged in import and export. So the auditor may ask, inquire the management. See, when the auditor is inquiring, he's performing what? He's performing an audit procedure only. So he may inquire the management, okay, management, tell me from where do you import? From where do you get your raw material? Hana? So this is what he's identifying the risk. Is there any risk associated with the organization? After the risk has been identified, he'll assess and evaluate such risk, whether such risk is affecting the financial statement pervasively, that is having the effect on many assertions. Simple hai na? Logical chal raha. Now, once the auditor has identified and assessed, he will also consider what? The related controls. Internal control को भी तो consider करना है ना. It was mentioned here, including the entity's internal control. In the objectives, it was mentioned here. He will consider the related controls, and he will see that as to what can go wrong. That is, once the internal control are also considered, then what can go wrong. And lastly, he'll see the likelihood of misstatement, the possibility of the misstatements, whether the magnitude of that misstatement can be material or not. Let me just take you through the module, and then this topic is going to be more clear to you. So this we have done. I am on page number 3.12. This we have done, Hannah. And you all know that it exists at the financial statement as well as the assertion level. Just a minute. Just a minute. So we were here. So for the purpose of identifying and assessing the risk of material misstatement, the auditor shall, first of all, he'll identify the risk throughout the process of obtaining an understanding of the entity and its environment, including relevant control that relate to the risk, and by considering the class of transaction account balances disclosure in the financial statement. See, why the related control? Because internal control have been implemented by the management in order to ensure that such fraud or error can be prevented or detected and controlled. So controls will also be considered by the management, by the auditor. Then assess the identified risk and evaluate whether they relate more pervasively to the financial statement as a whole and potentially affect many assertions. Simple. That whether they affect the financial statement as a whole or not, right? Then relate the identified risk to what can go wrong at the assertion level, taking account of relevant controls that the auditor intends to check. Test. So whatever internal control auditor intends to test, see, it might be possible. Let's say there is an internal control. An auditor decides that I'll not rely on this internal control. So when the auditor decides not to rely on any internal control, he'll not test that also. Na? Why? Because the auditor is not required to give any opinion on the internal control as such. Na? He has to give his opinion on the financial statement. Now, when the auditor decides that, okay, I'm not going to rely on the internal control implemented by the management, then why to waste the time in testing that internal control also? Because auditor in any ways he's not going to rely on the internal control. So that is why here it is mentioned the auditor intends to test and consider the likelihood of misstatement, including the possibility of multiple misstatements, and whether the potential is what likely misstatement is of a magnitude that could result in a material misstatement. So whether after considering the internal controls, after considering the identifying and assessing the risk of material misstatement, considering the internal controls, considering whether they are affecting the financial statement as a or only particular to a single or one or more assertion. Now auditor is going to see as to what can be the magnitude of the potential misstatement. See, why is the auditor doing all this? Because you all know that whatever risk of material misstatement is identified and assessed here, now the auditor under SA 330, he is going to respond to that risk. And accordingly, he is going to plan his substantive procedure, his further audit procedures. See, when we were doing SA 300, so see, once the risk assessment procedures ka result is there, based on that, the auditor is going to decide the further audit procedures. Okay? So that is why this working is to be done. See, as such, this risk assessment procedures that the auditor is performing in order to identify and assess the risk of material misstatement. So as such, these will not give him sufficient appropriate audit evidence. But see, if he identifies and assesses any risk here, he's going to concentrate more on that area. Na? So this is going to provide a base for planning of the further audit procedures as per SA 330. I hope I'm making sense to all of you. You all are able to understand. So let us just have a look at this topic from your module, that is risk assessment procedures. We will go through this topic and then we will take a break. So someone was asking, ma'am, when we will break. So we will take a break once we are through with page number 3.15. So risk assessment procedures. So what are risk assessment procedure? Again, the name of SA 315. So see the name of SA 315. It is in the definition of risk assessment procedure. It is in the objectives also. So the name is so very important. And in fact, after learning the name now, you are able to understand as to what the auditor is performing, what is he is doing under SA 315. So what is the definition? The audit procedures performed to obtain an understanding of the entity and its environment, including the entity's internal control. These words are not in the name of SA 315. To identify and assess the risk of material misstatement, whether due to fraud or error at the financial statement and assertion level, are defined as risk assessment procedures. So this is again really very, very important. Just be with me. See, risk assessment procedures are a basis for the identification and assessment of risk of material misstatement at the financial statement and assertion level. The auditor shall perform risk assessment procedure to provide a basis for identification assessment of risk of material misstatement at the financial statement and assertion level. Risk assessment procedure by themselves, however, do not provide sufficient appropriate audit evidence on which to base audit opinion. So it cannot happen that only after performing the risk assessment procedure, only after identifying and assessing the risk of material misstatement, let's say auditor assesses, he identifies and assesses that the risk of material misstatement is high. So based on that, only auditor cannot give his opinion, audit opinion. Why? Because these will not form his identification and assessment of risk of material misstatement will not give sufficient and appropriate audit evidence. It basically gives a basis for determining the further audit procedures under SA 330. I hope it is clear. Mohammed Shoaib, your doubt I'll take up in the next chapter. Hana? still responses to assess risk of material misstatements. I mean to say that when under listen to me carefully, when under SA 315, the auditor identifies and assesses the risk of material misstatement by performing the risk assessment procedures. He will respond to such risk. How will he respond? It basically means, see, he has identified and assessed such risk. He will not ignore that now. The area where there is more risk, he's going to devote his team and time towards that area. That is, he's going to devote more audit procedures to that area. So where he does that under SA 330. So that is why the name of that essay is what? The auditor's responses to assessed risk. So responses, I told you, the auditor will not start communicating with the risk. Na? How will he respond? He will perform more audit procedures in those areas wherever it is required. Mohammed Shoaib, I hope it is clear. So what is included in risk assessment procedures? So I hope it is clear. So Sukaina, you yourself answer. She's saying, ma'am, when will risk assessment procedures be performed? See, plan includes what? So while planning, you are what? You are determining what will be your planned risk assessment procedure, what will be your planned further audit procedure, and what will be your other procedures. So Mohammed is saying, ma'am, it is clear. Sukanna, you also tell me whether it is clear or not. So risk assessment procedures may inquiries of management. So whatever examples we were discussing, I told you that auditor is going to inquire the management, communicate with the management that, okay, tell me from where do you import, from where do you get all your raw materials. So this is what inquiries of management and others within the entity. So if you just keep in mind that by performing the risk assessment procedure, now auditor is obtaining an understanding of the entity and its environment. So from where can you get the understanding about the entity? From the management, from the persons within the entity, who in the auditor's judgment may have the information that is likely to assist in identifying the risk of misstatement due to fraud or error, right? Second is by performing analytical procedures. So what are analytical procedures? These are covered in detail in your next chapter, but still for the purpose of this topic, see, before performing any procedure, na, abhi to we are just obtaining an understanding about the entity and its environment and internal control. So here, what can auditor do? Auditor will, first of all, he'll inquire, okay, management, tell me from where do you import? What is your major business segment? What is the revenue? Acha, your revenue was so much. Auditor may now, he may calculate GP ratio of this year, of last year. He may calculate the GP ratio of the other companies in the similar industry. So what is he doing? He is just calculating what ratio, he is just doing ratio analysis. So this is what nothing but analytical procedures. Ratio analysis. He is looking at the trend. See, when he is doing all such calculation, any unusual thing, any unusual transaction, he can quickly just have a look. Let's say GP ratio, this year it is 10%. Last year it was 9%. Last to last year it was 8%. Now let's say this is the current year and it is 15% here. So now this is something unusual which is against the trend. So he can again ask the management, okay, what is the reason? So here he is just having an overall understanding. Hana? So these are what analytical procedures. He's comparing it with the industry, similar companies in the, different companies in the similar industry. So he can compare the company's data with the other companies in the similar industry. He'll see that, okay, other companies are earning 15%. My client is earning only 10%. Why? He'll again inquire the management. So these are what risk assessment procedure. He may observe and inspect. Inspection of what? Let's say the financials of the other companies, the financials of the previous year. So just try to understand, he's just obtaining what? Understanding of the entity and the environment. Now, how will you will ask, ma'am, how the environment? See here, when the auditor is asking the management, he can always ask the management, "Oh, okay, management, tell me what all rules and regulations are applicable to your company. What the government policies, what are the government policies that are applicable to your company?" Right? Is it clear? So let us just have a look at this topic from your module. So inquiries of management and others within the entity. Much of the information obtained by the auditor's inquiry is obtained from management and those responsible for financial reporting. However, auditor may also obtain information of or a different perspective in identifying risk of material misstatement through inquiries of others within the entity. Very, very important, within the entity, or other employees with different levels of authority. See, auditor may discuss with the internal audit personnel in order to obtain certain understanding about the entity and its environment. Then employees, in-house legal counsel, then maybe marketing and sales personnel, risk management function, information system personnel. So these are what the person which auditor feels that they can provide him with the information for understanding the entity and its environment, and it is within the entity. Is it clear? Is it clear? Then analytical procedure, as I've told you, that basically, see, will be doing essay 520 in detail for understanding these procedures. So basically try to understand whatever trend and ratio analysis the auditor performs, or comparing the data with the other similar companies in the different companies in the similar industry. So that is what analytical procedures. And last but not the least is was observation and inspection. See, when you are getting any understanding of the entity, so auditor can just observe how the functioning has been done. He can just inspect the documents. He can just inspect the, let's say, the warehouses or the factories or the buildings, right? So observation inspection may support inquiries of management and others, and may also provide information about the entity and its environment. Example can be entity's operations. See, when the auditor is observing. So what is observation? When the auditor is observing any process being performed by others. So this is what entities operations. So documents when auditor is looking at, it is what inspection. Reports prepared by management, again what inspection. Entities, premises and plant facilities, again it is what inspection. Is it clear? Is it clear? Simple processes. So these are what risk assessment procedures, right? So the information obtained by performing risk assessment procedures, see, we have seen that the information that is obtained by performing risk assessment procedure that do not provide sufficient appropriate audit evidence as such on which auditor can base his audit opinion. It just provide a basis for designing the response to such risk. But yes, it can be used as an audit evidence. See, information obtained by performing risk assessment procedure and related activities may be used by auditor as audit evidence to support assessment of risk of material misstatement. It is not mentioned here that audit opinion can be based on such results of risk assessment procedures. Just for the purpose of supporting the assessment of risk of material misstatement, it can be there, right? So students are saying, ma'am's voice is buffering. So I'll do one thing. Otherwise, also I had to take a break. So we will take a break of 10 minutes here. We are on page number 3.6. After the break, we will discuss test your understanding 4 and 5, and then we'll start with the next topic. So we will take a quick break of 10 minutes. Meanwhile, you can send in all your queries, right? So students, I hope you all are back after the break. So we were on page number 3.6. So go read this test your understanding part 4, page number 3.16. So Jojo Limited is planning to list on Bombay Stock Exchange next year. As an auditor of Jojo Limited, identify any one reason of increased audit risk due to listing of the company next year. So this is basically talking about what? Audit risk. So send in your replies. Quickly send in your replies. See, the company is getting listed on Bombay Stock Exchange next year. So, are there any increased chances of audit risk? So, Om Gupta is absolutely correct. Window dressing of the financial statements can be there. So, the answer that is given on your page number 3.84, it says that Jojo Limited is planning. Okay, let me just take you through page number 3.84. Yeah. So the company is planning to list on Bombay Stock Exchange. There is a greater chance of misstatement in financial statement due to planned listing next year. There could be possibility of intentional manipulation of financial statement so that good response is received to the proposed issue. Therefore, so the questions asked us about what? Audit risk. Therefore, there is increased audit risk that the risk of expressing inappropriate opinion by the auditor when financial statements are materially misstated. So is it clear? Is it clear? So the next question. So test your understanding, question number 5 in continuation of the above question. So on using the financial statement of Jojo Limited put up for audit, it is observed by the auditor that current ratio has improved from 1.20 is to 1 to 1.75 is to 1. Identify what kind of risk assessment procedure are being performed by auditor. Has it any relation with the listing of the company next year on the Bombay Stock Exchange? So what kind of procedure is this? When the auditor is calculating the ratios and is comparing it with the earlier year. So it is what? Analytical procedure. It is noticed by auditor that current ratio has improved from 1.20 to 1.75. The auditor is using analytical procedures as risk assessment procedures, right? Current ratio has improved from previous year. There could be possibility of misstatement in current assets and current liability. Current ratio is formed by current assets and current liability. It is possible that improvement in current ratio is artificial due to misstatement and has been done to secure good response to the proposed issue of the company next year. So Swati, Mohammed, Om, absolutely correct. Analytical procedure and chances of what? That the financial statement has been manipulated. More specifically, the current assets and the current liabilities. So students, the next topic that is given in your module on page number 3.16 is essay 320, which is materiality. This I'll be taking up in the next session. So abhi we'll be doing essay 315 ka hi further part which is left, which is given on page number. Just a minute. Yes, page number 3.24. So I've left this second topic from your module as of now. I'll be covering it in detail in the next session. So this is a continuation of essay 315 only. We are on page number 3.24. So when we were saying that auditor will identify and assess the risk of material misstatement, so you all have understood what is meant by risk of material misstatement. Now, through understanding the entity and its environment, so if you remember, I gave you example, the auditor will inquire the management, okay, what is your import? What is your export? From where do you get your raw material? So this is what understanding the entity and its environment. So there are a number of information, number of questions that the auditor can ask the management, or he can derive it from the by inspecting or observing the various process performed by the management, or inspecting the various documents. So a number of information can be gathered. So what kind of information, what kind of understanding the auditor needs to obtain, that we are going to understand in this topic. And again, a very important question from your examination point of view also. 5 points are there. You can always get a detailed 3 marker or 4 marker question with respect to any particular point, right? So essay 315, which is what? Identifying and assessing the risk of material misstatement through understanding the entity and its environment, states that auditor shall obtain an understanding of the following. So there are 5 points. So let us just first have a look at all the 5 points, the heading of all these points. So relevant industry, regulatory, other external factors, including the applicable FRF. So this is basically the external environment information that the auditor can obtain. So what is included in this? We will discuss all those points. Nature of entity. So the internal factors basically of the entity. The accounting policies, which is again internal to the entity. Objective strategies, related business risk. Objective strategies internal, and related business risk can be what? External or internal. Measurement and review of financial performance of the company. So these 5 points we will be discussing. So see, relevant industry, regulatory, and external factors, including the applicable financial reporting framework. So just keep in mind that you are obtaining an understanding. So let's say you are conducting the audit of ABC Limited, which is involved in, let's say, manufacturing of bicycles. So here you are performing risk assessment procedure. It can be inquiry, it can be analytical procedures, or it can be what your inspection or observation. And you are understanding the cycle industry, and you are understanding the cycle company for which you are conducting the audit. So relevant industry, regulatory, external factors, including the applicable financial reporting framework. Quickly tell me any external or industry points that come to your mind. Quickly tell me. Send in your replies. A very simple topic and a very important topic also. Industry, regulatory, other external factors. So I'm waiting for your replies. So the factors can be like the competition that is being faced by the entity. So many of you have now replied: technology changes, environmental laws, government policies, applicable regulation and law, and more. Swati, so you are absolutely correct. So relevant industry factors include industry conditions as the competitive environment, supplier, customer relationship, technological development, right? So whether it is a seasonal activity, right? So auditor is doing what? He's understanding the entity, na? Then are any specific risk there? Relevant regulatory factors like the regulatory environment, right? Then you have taxation, government policies, environmental requirements affecting the industry and the business. Other examples can be economic conditions, whether they have impact on the organization, the interest rates, the availability of finance, inflation, etc. So the auditor has to consider all these factors external to the organization. So how will he obtain that information? He may inspect in case any manuals of the organization are there, or the annual report of the last year or this year, or he may inquire the management, right? So auditor will go through all those documents, or he'll inquire the management. So these were various external factors. The nature of the entity. So this question was there in your last year, I think, paper. So nature of the entity, including, see, nature of the entity is what? Internal points. So what are the operations of the entity? the ownership and governance structure, types of investment the entity is making and plans to make, including any special purpose entity. If any entity for a special purpose have been incorporated, the way that entity is structured, how it is financed, whether it is equity based, whether it is in the form of your debt, whether that debt is from the banks or from the public. To
मैम
enable the audit. हाँ,
मैम आपकी वॉइस ब्रेक हो रही है।
वॉइस ब्रेक हो रही है।
अभी ठीक हो गई है, 2 बार हुआ ऐसे, 5 मिनट के अंदर 2 बार हुआ ऐसा।
अच्छा, वैसे तो नेटवर्क तो कंप्लीट है यहाँ से, तो देख लेते हैं, अभी कंटिन्यू करूँ?
क्यों मैम?
कुछ स्टॉप, शेयरिंग स्टॉप करके करूँ क्या, बताओ?
नहीं नहीं, आप कंटिन्यू कीजिए।
ठीक है। सो द नेचर ऑफ द एंटिटी है ना, सो उसमें क्या था, वी वर डिस्कसिंग अबाउट द ऑपरेशन, सी द इनपुट, द आउटपुट, व्हाई द ऑडिटर विल बी एबल टू अंडरस्टैंड ना हाउ द कंपनी इज वर्किंग, हाउ द मैन्युफैक्चरिंग प्रोसेस इज वर्किंग, आर देयर एनी बाय प्रोडक्ट्स, इज देयर एनी स्क्रैप सेल, सो ऑल दैट थिंग इज गोइंग टू help auditor in understanding the entity in a better way. The ownership and governance structure, the types of entity, for example, let's say what are special purpose entities, so let's say the company has incorporated one or two entities that are manufacturing electricity for the factory itself. So captive consumption of electricity is there, and for that special purpose, some entity have been incorporated. So is there any thing like that? The way the entity is structured, how is it financed? I gave example of whether it is equity based, whether it is debt based, debt in the form of bank loan, or let's say in the form of debentures. So an understanding of that. So whether the company is having any complex structure, like see, it is mentioned that the understanding of the nature of entity enables the auditor to understand whether entity has a complex structure. For example, whether it is having subsidiaries, right? Why? Because complex structure means the risk of material misstatement increases. So this understanding assists the auditor in determining whether related party transaction have been identified and accounted for. See, related party transaction poses significant risk, Hana, and thereby increasing the risk of material misstatement. So see, when auditor identifies that there are related party, he understands that the risk of material misstatement is high. So will he give his audit opinion as it is? No. What he's going to perform, he'll devote his more team and time towards such transactions. That is, he'll accordingly determine the responses to such assessed risk. As simple as that. ठीक है, special purpose entity, Sukaina, I hope I've given you the example. I hope it is clear. Now, example of matters that the auditor may consider while obtaining understanding of nature of entity. So basically, like business operations, such as the revenue sources, products or services, operations, location, product facilities, investment and investment activities, financing and financing activities, financial reporting. So all that information the auditor is going to obtain. I hope it is clear. So, Kaina, is your doubt clear with respect to special purpose entity? The next is the entity selection and application of accounting policies, including the reasons for changes there. So, the accounting policies, whether the company has followed the appropriate accounting policies and in whether they are consistently followed or not. How can auditor consider that? By inspecting the financial statements, or he may inquire the management. So clear, is it clear? Then the next point is entities, objectives, strategies, and the related business risk. So objectives, strategies, and related business risk. See, students, see what are objectives? So objectives, it is mentioned that it is basically the overall plans of the entity. And what are strategies? So these are the approaches which the management take to achieve those objectives, right? And if you talk about business risk, so business risk is a broader term as compared to risk of material misstatement. But risk of material misstatement will be covered in business risk, right? See, risk of material misstatement, so far as the auditor is concerned, these are related to what? Financial statement. But business risk is a wider term. But it is possible that any kind of business risk is going to have any financial consequence. So in any which ways, auditor will be concerned about what? Business risk. So when there are various external factors, which we have discussed in point number 1, there are various internal factors, which we have discussed in point number 2. To respond to these factors, the entity's management defines the objectives, right? See how each point is linked. It says that the entity conducts its business in context of industry, regulatory, and other internal and external factors. So basically point number 1 and 2. To respond to these factors, the entity's management defines the objectives. And how objective is defined here? Which are overall plans of the entity. Strategies. Strategies are the approaches by which management intends to achieve its objective. And business risks are broader than the risk of material misstatement of financial statement, though it includes the latter, right? And understanding, now why the understanding of all these things is required? So I told you that business risk is going to have a financial consequences. So the auditor is concerned about financial impact on the financial statement. So what are the matters regarding which the auditor will obtain an understanding when he is understanding the entity's objectives, strategies, and the business risk? So see, there can be any industry developments for which the company is not having expertise or any personnel to deal with such changes in industry. For example, let's say that there has been any technological improvement developments, but the company is not having the required resource to simultaneously develop or update its technology. This is what? Business risk. Any new product or service is there, but the company is having the increased product liability. What does that mean? See, any new product or service has been launched, but the liabilities, the cost with respect to such new product or service is more vis-a-vis the profits it is generating. Or expansion of the business. The company has expanded the business, but the demand has not been accurately estimated. So these are what? These are all business risk for which the company must have the objectives and the strategies. So once the auditor obtains an understanding of all this, since such business risk is going to have a consequential financial impact, so these are going to help the auditor in having an understanding of the risk of material misstatement, that is in understanding the entity and its environment. Is it clear? Then the last is what? Measurement review of entities' financial performance. Students, see, when the auditor is understanding the entity and its environment, the auditor will obtain an understanding of the measurement and review of entities' financial performance. See, when management has something in mind that, okay, this should be our performance measurement, like itna GP we should earn. So there are two ways. First is what? Management can either put efforts to earn that profit. Second can be what? In order to show that result, management is manipulating the financial statements, right? So auditor needs to understand, see, it is mentioned here, management and others will measure and review those things they regard as important. Performance measures, whether external, internal, create pressures on the entity. These pressures in turn may motivate management to take action to improve the business performance or to misstate the financial statement. Now, are you able to understand why this understanding of this is also important? Accordingly, an understanding of entities' performance measure assists the auditor in considering whether pressures to achieve performance targets may result in management actions that increase the risk of material misstatement. So what can be various financial performance measures? So it can be like the various ratios, the trends, the operating statistics, the period-on-period financial statement performance analysis, your budget forecast, the variance analysis, or any credit rating agencies like the report of the external credit rating agencies. So I hope it is clear. So we have done 5 points. That is, let me just take you through all these again. So auditor is what? He is obtaining an understanding of the entity and its environment and how. by obtaining an understanding about certain external factors, which is written as what? Relevant industry, regulatory, and other external factors, including the applicable financial reporting framework. So auditor can ask now, okay, management, tell me, is there any change in the applicable financial reporting framework? If yes, what will auditor do? He'll devote his more resources towards such area. Nature of entity, so operations, ownership, governance structures, the types of investment, whereby I told you about special purpose entities, the structure and how it is financed. Accounting policies, whether these are appropriate, consistently applied. Objectives and strategies, related business risk. And last, the measurement and review of financial performance. Right? So is it clear? So this was about your obtaining the understanding about the entity and its environment. So let us do the next topic, which is why understanding. See, why the understanding about the entity and its environment. See, you all know that planning is a what? Continuous process. Just a minute. So you all know that planning is continuous process. So when the auditor is obtaining the understanding and about the entity and its environment, it will help the auditor in planning the audit and in identifying the areas requiring the special attention. Is it clear? Simple. Again, understanding the entity is a continuous process. If you remember, we have seen that planning is also what? It is not a discrete phase of audit. It is a continuous process. Remember, we have done this. Same way, understanding the entity is also a continuous process. So it will not happen that auditor, once he has obtained the information about the entity, then it is over. Why? Because changes can always be there. So auditor will have to, update his knowledge. He will have to gather more information, analyze the information throughout the audit process. And in fact, such updated information about the entity and its environment will be required by the auditor when he's assessing the risk of material misstatement, when he's determining materiality. See, unless and until auditor is aware about the entity and its environment, he cannot determine the materiality level in terms of SC320. When he's considering the appropriateness of selection and application of accounting policy, when he's identifying the areas when special consideration is required, for example, related party and this, when he's developing expectation for use when performing analytical procedures. This we will do when we'll be doing SA 520 next chapter. When he's evaluating the sufficiency, appropriateness of audit evidence obtained, such as appropriateness of assumptions, management, oral or written representation. So throughout the process of audit, the auditor needs to have an understanding of the entity and its environment. So it will not happen that once the information has been obtained, now no other information will enter his mind. No, that will not happen. So Mohammed Shoaib, the example that you have given is absolutely correct. This is a kind of business risk only. So I hope this topic is also cleared. So we have done till page number 3.28. Please go through this illustration on number 4. And I've left the topic of materiality SC320, which I'll be taking up in the next session. So I hope everything is clear. Quickly send in your replies, whether till where we have covered it is clear, and go through this illustration 4, which is on your screen. So Swati saying, yes, ma'am, it's clear. Others also please reply. So I am on page number 3.28. Auditor of ABC Textiles Limited chalks out an audit plan without understanding the entity's business, right? Since he has carried out many audit of textile companies, there is no need to understand the nature of ABC Limited. Advise the auditor how should he proceed. Do not look at the answer. Tell me. So, Om, Sukaina, Swati, all are saying, ma'am, it's clear. That's good. Tell me whether the auditor should obtain the understanding. So obtaining an understanding of the entity, its environment, including entity's internal control, is a continuous dynamic process of gathering, updating, and analyzing information throughout the audit. The auditor should proceed accordingly. That is, he should obtain all such information. Read this illustration 5, page number 3.29. These are very simple. As I always say that practical questions are these, but based on your conceptual understanding. We are on page number 3.29, illustration 5. Send in your replies. Yes, Sukaina, Swati, you are correct. So, illustration number 5. While auditing the books of accounts of Heavy Material Limited for the financial year 22-23, a team member of the auditor of Heavy Material Limited showed no inclination towards understanding the business and the business environment of the above mentioned company. Is the approach of team member of the auditor of Heavy Material Limited correct or incorrect? Also give the reasons. So Swati is correct. Others also please reply for illustration number 5. He is not he is not interested in understanding the business and the business environment. So is this correct? So the answer is no. The approach of team member of the auditor of Heavy Material Limited is incorrect. Why? Because see, it is mentioned here, you need to give reasons also. Because understanding the business and the business environment of the company whose audit is to be conducted is very important. Why? Because it helps in understanding the audit and identifying areas requiring special attention during the course of the audit of that company. Go through illustration number 6 also, or do it as a homework. So Bhumika is saying, ma'am, approach of team is incorrect. Om is saying incorrect. Swati is saying he's not right. Right, absolutely correct. So we have done till page number 3.9 and I have left only one topic, which is essay 320, which we'll be doing in the next session. So now I'll be starting with fourth topic, which is what? Internal control. So who is responsible for design, implementation, maintenance of internal control? Quickly send in your reply, students. Bhumika, Om, Swati, Sukaina, Mohammed Shoaib, Anmol, please reply. Who is responsible for the design, implementation, and maintenance of internal control? See, when you enter any mall and you see that there are metal detectors, or let's say a metro station, there are metal detectors, there are CCTV cameras, right? So these are what? Internal control implemented by the metro people itself, right? So these are just general examples. If you talk about financial example, the internal control relating to financial statements, so we have always discussed about segregation of duty. So the person who is making entries in the system, the person who is making the payments, the person who is, let's say, asking for confirmation from the party that whether you have received the payment. So segregation of duty should be there, that the three persons are different who are performing all three duties. So this is what your one of the internal control implemented by the management. Or let's say BRS, bank reconciliation statement, a very simple example of what? Internal control. So what is internal control and who is responsible for design, implementation, maintenance of internal control? So this you have told me that it is the management. So if I ask you whether it is management or auditor, you said it is the management. And what is the purpose? So this we are going to do. And these three things are covered in definition of internal control. And the definition is given where? Under essay 315. So these topics are interrelated. So that is why I have left essay 320 for the time being. So internal control. Just so internal control may be defined as the process designed, implemented, maintained. So you may learn it as design, implemented, maintained by those charged with governance, management, and other personnel to provide reasonable assurance. Why? Because absolute assurance is not possible here also. Why? Because of inherent limitations of internal control. Assurance about the achievement of entity's objective with regard to four things. What are those? Reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable laws and regulations. So, just a minute. Let us have a look at the definition in detail from here. So it is a process which is designed, implemented, and maintained by whom? By either those charged with governance, management, or other personnel. Let's say other personnel, IT department of the company, or let's say any internal control with respect to the HR department. So let's say HR department was involved. So other personnel. Why? To provide reasonable assurance about the achievement of entities' objectives. See, here nothing will come about the auditor. So this is implemented by the entities, you can say management, those charged with personnel, those charged with governance or other personnel. Why? The ultimate objective is to achieve the entity's objective with regard to four things. Reliability of entities' financial reporting. That is, whatever information has been reported, financial information has been reported, that is reliable. In order to ensure that internal control has been implemented either by management, those charged with governance, or your other personnel. Effectiveness and efficiency of operations. That is, the operations that are being conducted. They effective is what? Achieving the end result. Efficiency is what? With minimum wastage of resources. So operations are being conducted in an effective manner and efficient manner. Compliance with laws and regulations. So whatever rules, laws, regulations are applicable to the company, that has been complied, and safeguarding the assets of the company. These are what? Internal control, right? In the way in which internal control is designed, implemented, and maintained, it varies with an entity's size and complexity. Simple, right? So let us have a look at the definition of internal control again. And students, a very important definition. And the way I told you that in the name of SA 315, if you remember the name of SA 315, so your objectives, your definition of risk assessment procedures, and your understanding about the entire SA 315 is there. It is, you will be able to understand it and remember also. Why? Because that name is really very, very important. It gives you a bird's eye view of all these topics, right? Same way, if you concentrate on the definition of internal control, you will be able to understand various topics which we are going to cover, right? So it is the process which is designed, implemented, maintained by those charged with governance, management, or other personnel, right? To provide reasonable assurance. Now you know reasonable hai. Why? Because of inherent limitation. Where is inherent limitation? See, it is given as point number 4.4. Okay? So reasonable assurance. About what? Achievement of entity's objective. Entity's objective with respect to what? 4 points. What are those 4 points? Reliability of financial reporting, effectiveness and efficiency of operations, compliance with applicable laws and regulations, and safeguarding of assets. Quickly tell me, is the definition of internal control clear to you? And here, students, I would like to repeat it again, that auditor, when he's conducting the audit, independent audit of the financial statements, independent examination of the financial statement, he as such, so here I'm talking about statutory auditor. So he is not required to give his opinion on the financial statement as a, he is required to give his opinion on the financial statement as a whole. He is not required to give his opinion on the internal control as such. Then why is he identifying and assessing the risk of material misstatement through understanding the entity and its environment, including the related internal control? Because his assessment of the internal control is going to help him in determining the nature, timing, extent of his substantive procedure. That is what actual checking he's going to do, whether he's going to rely on the internal control or not. So based on that, his extent, his nature, timing of checking is going to be impacted. So that is why he is understanding the internal control. That is why we are studying about the various, you will see, we'll be studying about limitations of internal control, the various components of internal control also. So Bhumika is saying it is clear, definition is clear. Others also please reply. So what are the benefits of understanding the internal control? See, first of all, though, when the auditor is understanding the internal control, he can identify the various types of potential misstatement. Potential is what? Likely misstatements. Then various factors that affect the risk of material misstatement. Why? Because you all know that risk of material misstatement may, one of the factors is what? One of the factors is what? Your internal control itself, right? Control risk, which is related to internal control. And then designing the nature, timing, extent of the further audit procedures, right? Simple. Now, without looking at the module, tell me what in your understanding can be the limitations of internal control. You all have seen that reasonable objectives, reasonable assurance about the entity's achievement of objectives relating to 4 matters. Now, why only reasonable? That I've told you because of the limitations of internal control. Quickly tell me what, according to you, can be the limitations of internal control. Just keep in mind that internal control is implemented by the management only. Now tell me what can be the limitations with respect to internal control. I'm waiting for your replies. Swati, Sugaina, Bhumika, Mohammed, Anmol, Om, please reply. Limitations of internal control. Others also please require. I've received one reply from Om only. Acha, others have also replied. So Sukaina is saying fraud by management. Swati is saying lack of coordination. Sukaina is saying collusion between employees. Anmol is saying subjective decision by management. Om is saying wrong decision between management. Okay. So the first point says that internal control can only provide reasonable assurance due to the inherent limitations of internal control. So this is basically an explanation as to why reasonable assurance is only possible. Reasonable assurance about what? The achieving of entities' objective of financial reporting, right? First of all, see, students, internal control is implemented by the management who are what? Human only. So human judgment in decision making is involved. See, human judgment can be faulty. Breakdowns in the system can be there due to human error, right? There can be an error in the design. So let's say it is a automated internal control. So there can be an error in the design. So human judgment in decision making. Lack of understanding the purpose. So let's take an example. For example, an internal control is there that with respect to the creditors, if certain payments are not received beyond, let's say, 100 days, so one report will automatically get generated. Exception report will automatically get generated. Now, the person who is viewing that report, he is not able to understand the very purpose of this report. So he is not using that report now. So lack of understanding the purpose. So let's say another example can be, let's say when the tax payments are to be made. So 2 days prior to the due date of the due date of payment of taxes, some reminder mails are automatically sent to the concerned person. But he is not able to understand that that is a reminder mail for the purpose of making the payments. So there is what? Lack of understanding the purpose. So the operation of a control may not be effective, such as where information produced by the purpose for the purposes of internal control. For example, exception report. I gave you example of creditors ka listing is not effectively used because the individual responsible for reviewing the information does not understand the purpose or fails to take appropriate action. Simple. Collusion of among employees. Many of you have given this answer. So controls can be circumvented by the collusion of two or more employees. So basically segregation of duty, which is required. So which is one of the example of internal control. So let's say that is not been followed, right? For example, management may enter into side agreements with customers that alter the terms and conditions of entities' standard sales contract, which may result in improper revenue recognition. So one example was what? Segregation of duty. Take another example. See, it says that suppose there are certain sales agreement between the management and the party, right? Those sales agreement are made available to the auditor to go through. But what if the management colludes with the other party and they enter into one more agreement, a side agreement, additional agreement? That main agreement is given to the auditor to go through, but there is an additional agreement also which is not shown to the auditor. Now, this is what example of collusion between the management and the a third party. So can auditor do anything? So it says that also edit checks in software program that are designed to identify and report transaction that exceed specified credit limits may be overridden or disabled. So if any such system is there whereby that if any limit is exceeded, there will be what? Certain messages will be there, or certain some message will pop up. So all that is disabled. So this is what? Collusion among people. Judgments by management. So many of you were saying, ma'am, judgments. So further, in designing and implementing controls, management may make judgments on nature and extent of control it chooses to implement, the nature and extent of risk it chooses to assume. So since management judgment is involved, which can be wrong at times, so these are again what? The limitations. And limitations in case of small entities. So here this point talks specifically about small entities. So students, with respect to smaller entities where the owner is the manager, so one person is there, or let's say two-person are there, so is segregation of duty possible? That is not possible. So in case of small entity, see, everything has its benefit and advantage and disadvantage. If any small entity is there, see, it is mentioned, let us just have a look. In small owner-managed entity, the owner-manager may be able to exercise more effective oversight than in the larger entity. This oversight may compensate for generally more limited opportunities for segregation of duty. So segregation of duty is not possible, but since only one person is looking at the entire financials or entire working, so he is in a better position to see as to what is not going or what is going wrong. On the other hand, owner manager may be more able to override the control. See, since everything is in his hands only, so it is possible that he himself overrides such control. So this is taken into account by the auditor when identifying the risk of material misstatement due to fraud. Is it clear? So when the auditor is identifying and assessing the risk of material misstatement through understanding the entity and its environment, including the related control, he considers these limitations of internal control also. So very simple point. Just go through this illustration 7. We are on page number 3.31 of the module. Quickly have a look at this illustration. So it says that auditor GR and Associates appointed for audit of P&G Limited, a manufacturing company engaged in manufacturing of various food items. While planning an audit, the auditor does not think that it would be necessary to understand internal control, advise the auditor in this regard. See, do not look at the answer. And if you remember, I've told you also that the auditor may intend not to rely on the internal control, then why will he waste his time in checking the internal control? Remember, keep that point in mind, read this question again, and then try to answer to this question on your own. So I'll read it again. Auditor GR and Associates appointed for audit of P&G Limited, a manufacturing company engaged in manufacturing of various food items. While planning the audit, the auditor does not think that it would be necessary to understand internal controls. Advise the auditor in this regard. So the answer The auditor shall obtain an understanding of internal control relevant to audit, although most control relevant to audit are likely to relate to financial reporting. Not all controls that relate to financial reporting are relevant to the audit. It is a matter of auditor's professional judgment whether a control individually or in aggregate or in combination with others is relevant to audit. So auditor will apply his what? Professional judgment in order to understand whether a particular control is relevant to audit or not. Because if auditor decides that he will not rely on the internal control, so will he involve his time and resources like time and team in checking that internal control? No. So because he considers that I'm not going to rely on that or it is not relevant to audit. Do this illustration number 8 as homework. Many of you have given answers for that also. So do this illustration 8 as homework. Okay. I hope this topic is also clear. So we have done with respect to internal control, the definition of internal control, which I told you is really very, very important. Then what are the benefits of understanding the internal control, the limitations of internal control. And now we are starting with another important topic, which is what components of internal control. So I told you that auditor as such, he is not giving any opinion on the internal control, but for the purpose of deciding his nature, timing, extent of substantive procedures, he will see the various, he will obtain an understanding about the internal control. Okay. So the 5 components of internal control that we are going to study are, though we are not able to, we will not be able to complete all these in the today's session. So, but what are those 5 components? So the control environment, the entity's risk assessment processes, the information system, including the related business processes relevant to financial reporting and communication, control activities, and monitoring of controls. These are the 5 components of internal control, right? So I'll be starting with the control environment. But before that, I'll ask you that whatever we have done so far till page number 3.33, whereby we have left one topic of what? Materiality. So tell me whether whatever we have done is clear. And in case of any doubt, you can ask your doubts just now. So I can see that there is a query of Mohammed Shoaib. He's asking me to repeat lack of understanding the purpose. So this point. So I am on page number 3.31. See, this is with respect to limitation of internal control. So let's say the payments are to be received from the customers. Right? Now, there is a system whereby if any payment is not received within, let's say, beyond 100 days, an exception report will get generated, right? And the purpose is that the concerned person, he can have a look at the exception report and he can send reminders to all the parties that your payment is outstanding, right? Now, in such situation, if the person who is, let's say, the email ID of the person is mentioned there, and on every 5th of the month, such report is generated, or let's say every quarter, such report is generated, and there is an internal control within the system that on every 5th of the end of the quarter, like the next month of the end of the quarter, the report will get generated and it will automatically be mailed to the concerned person. And he is required to send the reminders, right? Now, the person who is receiving the report, exception report, why? Because exceptions are there now that beyond 100 days, some payments are not received. Now, if any exceptions are there, so in that case, that person is required to send the request, or let's say the follow up from that the party. But the person who is receiving the mail, he is ignorant about this system. He is not aware that any such internal control is implemented. He just have a look at the report and he ignores it because he is unable to understand the purpose. So now, is that internal control effective? No. Why? Because there is lack of understanding the purpose. Let us have a look at this from the module again. The operation of a control may not be effective, such as where information produced for the purpose of internal control. For example, an exception report is not effectively used because the individual responsible for reviewing the information does not understand its purpose or fails to take appropriate action. Quickly tell me whose doubt was it? Mohammed Shoaib, is it clear? Is it clear now? And others also please reply so that we can proceed with the next topic, which is what? Control environment. So Mohammed is saying, ma'am, it is clear now. So that's good. So control environment. So we are saying again and again that internal control is what? It is designed, implemented, and maintained by the management. Now tell me, if any internal control is there which has been implemented, or let's say, take an example that whenever any traveling bill of any employee is passed, the same needs to be signed by two officials. Okay? This is an internal control having an impact on the financial statements, right? Now, what happens is whenever the traveling bill of MD or let's say CEO comes, then this rule is not followed. It is just signed by the person who is making the payment and it is not approved by, let's say, two officials. So is the internal control being followed here? So are the MD or the CE, are these two giving good examples? Are they setting good examples for the company? Is there a culture of honesty or integrity which has been promoted by the higher level management? Give me the answer. So Anmol, Mohammed and Swati are saying no. See, internal control to work effectively, there is a need for a good environment. The surroundings, the environment in which the internal control is going to operate is what? Control environment. And see, it is not that, when we talk about control environment, we are not talking about, materialistic thing or anything like that. It basically is the examples that has been set by the management. You can say the HR policies that are being implemented, right? The communication which is there within the organization, the involvement of higher authorities. So this is going to have an impact on whether the employees are following the internal control or not. See, if there is an internal control and you are aware that no one is going to interfere, no one is going to ask you anything, no one is going to question you anything, or no one is going to get involved in this. So chances are there that you will not follow that internal control. So unless and until there is a good environment, that internal control cannot operate effectively. So that is why the first and foremost component of internal control is control environment, which is important for the other components of internal control also. Because unless and until, see, if there is a flower and unless and until the environment is good, that flower will not flourish. Same way, unless and until the control environment is not good, the internal control cannot be expected to operate effectively. Okay, is it clear? So many of you are saying, almost all of you answered it correctly, that unless and I asked you whether MD, CEO, they are they are setting the examples of integrity, honesty. The answer was no. Sukaina, Swati, Mohammed, and more, everyone was correct. Okay. Now what is control environment? Why understanding of control environment is important for the auditor, that we are going to study in this topic. So control environment. So students, today I will not be able to complete this control environment, and I'll be continuing with this topic in the next session. But whatever time is left, I'll just give you a brief about what is control environment. And students, we have gone through the illustrations or the questions that are given in your module. Next session and next two sessions are also devoted for this chapter. There I'll be discussing with you some other questions also based on your last year papers, right? So the auditor shall obtain an understanding about the control environment. As part of obtaining this understanding, the auditor shall evaluate whether management has maintained a culture of honesty and ethical behavior. Just keep this example in your mind. So here, whether management has created and maintained a culture of honesty and ethical behavior. So the answer is no. And I told you that this control environment is important for functioning of other components of internal control. The strengths in the control environment elements collectively provide an appropriate foundation for other components of internal control. So what were the other components of internal control? We have just gone through the names as of now. That is the entities, risk assessment process, the information system, the control activities, monitoring of control. So unless and until the various elements of control environment are not strong enough, they do not have the strength. So these other components can also not function very well, right? So we have understood that the auditor needs to obtain an understanding that whether management has created and maintained a culture of honesty and ethical behavior, and whether the strengths in the control environment elements, they collectively provide appropriate foundation for the other components of internal control. Other components of internal control we'll be studying in the next session, right? So what all is included in control environment? Control environment includes the governance and management functions, the attitudes, awareness, and actions of those charged with governance and management. The control environment sets the tone of an organization, influencing the control consciousness of its people. Again, just keep this example in mind. See, control consciousness of its people, matlab whether the people are going to follow the internal control. So here control means what? In fact, wherever we'll be seeing, it is basically relating about what? Internal control. So control consciousness of its people is what? Whether they are going to follow the internal control or not. So control environment sets the tone of an organization. Take the vice versa situation of this, that MD, CEO, or any let's say a director, they follow this rule that the sign of two officials will be there when the traveling bill is to be passed. Tell me, will it be followed for all the employees then? Yes, chances are there that it will be followed for all the employees. But take a situation that we were discussing earlier, that with respect to these two employees, such rule is not followed. Then chances are there that employees will say that you are not, to the concerned person, that you are not following this rule for the higher officials. Then why are you forcing us to follow it? So control environment. So it basically consists of what? Governance and management function, attitude, awareness, actions of those charged with governance, and it sets the tone of the organization. That is, it influences the control consciousness of its people. I hope it is clear. When I'll be taking you through the summaries that I share with you on my screen, this is going to be, this will appear to be easy to you. I hope understanding part is clear to all of you. Now, what are the various elements of control environment? So the persons who are there within the entity, they are going to form the various elements of control environment. Let us just have a look at the heading. So communication and enforcement of integrity and ethical values. Then commitment to competence. Participation by those charged with governance. Management philosophies and operating style. organizational structure, assignment of authority and responsibility, and last but not least is what? Human resource policies and practices. Okay, so abhi I'm not going in detail here, but yes, I'm just touching upon this next topic. So I hope you're able to understand. Abhi tak we have done what is control environment, what understanding the auditor is going to obtain. The various elements of control environment, we have just seen that these are the various elements like the HR policy, the organization structure, participation by those charged with governance, management philosophy and operating style, commitment to competence. I'll discuss this in detail in the next session. Now, see, existence of a satisfactory control environment is not an absolute deterrence of fraud. What is meant by this? It basically says that if an effective, satisfactory control environment is there, it is not a guarantee that there will be no fraud. Vice versa. Let's say there is no satisfactory control environment. Chances of fraud increases. Are you able to understand? So existence of a satisfactory control environment as such is not a guarantee that fraud cannot happen. But if auditor, when he's obtaining an understanding about the control environment and he understands that the control environment is not satisfactory, then he'll be able to understand that the chances of fraud is poor. So let us just have a look at this line. See, this is really very, very important. The existence of a satisfactory control environment can be a positive factor when the auditor assesses the risk of material misstatement. However, although it may help reduce the risk of fraud, a satisfactory control environment is not an absolute deterrent to fraud. Conversely, deficiencies in control environment may undermine the effectiveness of control, in particularly in relation to fraud. So are you able to understand this? So I'll do one thing. Why I have gone through this topic? Because I wanted to give you as a homework to read till page number 3.35. Except for topic essay 320 materiality, you can leave all those 7-8 pages of that topic. But apart from that, till page number 3.35, students, please go through the module in entirety, as I always say, including the illustrations and all your test and your understanding questions. Okay? So I hope you are able to have a little understanding about what is control environment. I'll be discussing this in detail in the next session. And one more thing, as I always say, that before coming for the next session, please try to give 20 minutes to your chapter number 1 and 2. And 15-20 minutes to your chapter number 3 also. Students, believe me, then only these revisionally classes are going to benefit you all. If you do not go through what we have done earlier, then there is like the benefit which you can draw from these classes will be very less, right? So I hope you have understood, and all of you, whoever has sent me queries, I hope all these are resolved. So thank you for being patient listener, for giving me your 2.5 hours. Before coming for the next session, go through the module till page number 3.35. Thank you and bye-bye.